If you follow the trajectory of artificial intelligence, you know that the bottleneck is no longer just chips, it is energy. We are building digital brains that consume electricity at the scale of nations. Sam Altman, the CEO of OpenAI, saw this coming years ago. That is why he didn't just invest in AI. He became the chairman of a nuclear fission company. Today we are going deep into Oklo Inc., ticker symbol Oklo. Based on a forensic review of their financial journey from the AltC Acquisition Corp, SPAC filings to the explosive capital raises revealed in their Q2 and Q3 2025 reports, we are going to construct a thesis for why Oklo is positioning itself as the dedicated battery for the AI age. We will analyze how they transformed their balance sheet in 2025, their Aurora powerhouse technology, and why their business model of selling power, not reactors, changes the economics of nuclear energy. To understand the future, we have to look at the origin. The 10K filings from AltC Acquisition Corp in 2021 and 2022 show a SPAC searching for a target that could redefine an industry. They found Oklo. Unlike traditional nuclear companies that try to build massive, gigawatt-scale cathedrals of concrete, Oklo went small. They focused on advanced fission. Their design, the Aurora, uses liquid metal, cooling and fast fission to turn nuclear waste into fuel. This is the holy grail of efficiency. But for years, this was just a design. The market was skeptical. They asked, where is the money to build it? That question was answered in 2025. Let's look at the financial transformation. In early 2024 and Q1 2025, the cash position was tight. But the Q2 and Q3 2025 quarterly updates tell a story of massive capital influx. In the second and third quarters of 2025, Oklo executed significant public offerings and financing activities. By the end of Q3 2025, their cash and cash equivalents surged to over $400 million. This is a game changer. In the nuclear industry, cash is not just a safety net. It is the fuel for regulatory approval and initial construction. They have moved from a company surviving on a runway to a company with a war chest. Why is this capital raise so critical right now? Because of the data center pivot, the 2025 presentations highlight a strategic shift. Oklo is not just targeting remote communities anymore. They are explicitly targeting hyperscalers. An AI data center requires 247 baseload power. Wind and solar are intermittent. Batteries are expensive. Oklo's SMRs, small modular reactors, can be deployed directly on site behind the meter. This bypasses the congested grid and provides the reliability that tech giants like Microsoft and Google are desperate for. Let's analyze the order book and pipeline. The 2025 updates reference non-binding letters of intent that are converting into firmer commitments. The pipeline is growing into the gigawatts, but the most unique aspect of Oklo is their business model, power as a service. They do not sell the reactor to the customer. They build it, own it, operate it, and simply sell the electricity. This removes the construction risk from the customer, the data center, and places it on Oklo. It is a recurring revenue model, similar to a utility, but with the growth profile of a tech stock. We must also address the technology moat fuel recycling. The 2024 and 2025 documents detail their partnership with the Department of Energy to utilize spent nuclear fuel. This is not just environmental stewardship, it is economic alchemy. They are taking waste that the government pays to store and turning it into an asset. This dramatically lowers their long-term fuel costs, compared to traditional reactors that need enriched uranium. However, we need to be realistic about the risks. The Nuclear Regulatory Commission (NRC) is the gatekeeper. Oklo faced setbacks in the past, but the 2025 updates suggest a more collaborative and streamlined engagement with regulators for their Idaho site. The timeline is the biggest risk factor. Construction is slated for the late 2020s. This is a long-duration play, but the market is forward-looking. As AI models scale up in 2026 and 2027, the value of a secured zero-carbon power source will likely trade at a massive premium. So, what is the verdict? Oklo is a binary bet on the convergence of AI and nuclear. But with the liquidity secured in 2025, the bankruptcy risk has been taken off the table for the near term. Now, it is purely an execution risk. Can they build the first Aurora powerhouse on time and on budget? Sam Altman seems to think so. For the investor looking for asymmetric upside, Oklo represents a chance to own the infrastructure that will power the intelligence of the future. The balance sheet is ready. The technology is proven in physics. Now they just need to break ground.